Good afternoon, folks. We have a power-packed, fantastic 29-minute session here, but I promise you, whatever level of current stock and options sophistication you have, I am going to accelerate it, show you new concepts, simplify it, and show you our top patterns for selling options. Now, Vince, the prior speaker, was talking about both buying and selling them. And we at Master Trader also specialize in buying options, but we do it with the same approach that we're going to cover tonight, which is everything we do must start with a compelling pattern. Then we decide, based upon how bullish or how bearish we are on multiple time frames, do we want to do a directional stock or option trade or an income trade? Tonight, we're going to give you the benefit of both. We're going to show you those top patterns, and the patterns are so wonderful that they qualify for directional trades. But I'm going to show you how easy it is to sell options around these patterns to generate high probability weekly income. So, benefits of attending here. I don't care what type of trader you are. If you trade stocks, these patterns are going to be awesome. If you trade options, this approach using the Master Trader method is going to increase your odds of success. If you've never done either one of these, then this is going to be a wake-up call for you also of how we objectively approach the markets. I've been trading for 2.5 decades. I love the markets. I've been through every scenario. I worked for a global proprietary trading company, and I love trading options because they're just so much easier for me because of the mechanics of putting the odds in your favor. And sure, for fun, I'm a pilot and master captain. And the only reason I'm showing that here is the benefit of trading is you don't need any particular background as a prerequisite. You just have to have the ability to have a logical trading plan, an approach to the market, and ours obviously is the Master Trader approach, but it starts with these high probability patterns that we're going to be reviewing right now. Then you simply enter the position with proper position size and risk management and manage in between. So that's what captains and pilots do. They're unemotional. We follow the rules. We adopt to different information as it's being unraveled, and we give you the tools to then determine what to do under any circumstance that's thrown at us. I laugh at this obligatory disclaimers like, do we really need to tell you that trading involves a risk of loss? We're speculating in the financial markets. So we're putting our money on the line with the intent of trying to grow it and make a return. It's the idiots that are going to blow up their accounts without proper risk management. We actually ask ourselves, and we like entering trades to say, of course, this thing can go against me the moment I put it on. We have no idea what's going to happen next. But with a high probability pattern, we ask ourselves, how bad can I get hurt when the odds are stacked staggeringly in my favor? And that's what I'm going to show you here. What you're going to notice, though, on my clean charts as I show you our top 5 patterns for tonight, you are not going to see one single oscillator. If you pull up any trading package today, they have over 200 of them in the default section. Just stop this craziness. I mean, there's so many people in the industry that like to sell you their so-called proprietary indicators. Oh, it's $5,000 tonight's the special $500. Those oscillators are subjective indicators. What that means is, by definition, they are based on prices. they are derived from price and volume. So why not just look at price and volume and make our decisions and right there in colorful candlestick patterns without getting misled by these indicators? And that's probably going to, that statement right there is going to shock a lot of you, but I told you my promise was I want to shock you for the positive. Setup number one, master trader buy and sell setup. We keep it simple. We are looking for patterns that suggest a continuation in that direction, and we're looking for the proper setup to enter with what we call a price void. And a price void means it has room to run in the intended direction because there's insignificant resistance to the left or support if you're shorting. So on the right here, this is our bullish uptrend. Higher highs, higher lows. I don't need any oscillators. We are buying proper breakouts. So I'll show you on the next slide. And then we're buying pullbacks to support. How do I know when to buy on those retracements? These are pictures of buying. You are not going to hear me talk about, other than a wide range bar, igniting move is one of our 5 patterns. You're not going to hear me talk about piercing patterns, shooting, floating stars, piercing this and that. All indications are right here on the charts. This is telling me momentum has slowed. No follow through to this red bar, bottoming tail, removed some supply. These are the pictures I'm looking for at the reversals. And the opposite on shorting, retracements to resistance. Correct breakout trade. Stocks only go up, down, or sideways. Here's my uptrend, higher highs, higher lows, and as you saw in the prior slide, when I have a consolidation, is it a consolidation in an existing uptrend, or is it a consolidation after a big sell-off where there's signs of the stock bottoming and a new uptrend starting? Those are 2 different scenarios. We teach both. Let's just talk about breakout trades. The correct breakout trade is you never buy from the lower end of the channel on support if it makes a fluid move up through resistance, because that's a concept of ours called greater than 100% retracement, and pullbacks are very likely. I'll show you an example of that. This is the correct breakout trade. Higher low, consolidation at resistance, and then the safest area, because then it prevents false breakouts, is to buy the pullbacks to, this is what we call minor support. Prior resistance now becomes new support. The major support is way down here at the bottom, so we call up here minor support. And then again, the reverse on the shorts. So we have these first 2 setups in this one chart right here. We have declining moving averages. We have a consolidation. So this actually turned out to be a consolidation and a downtrend that ignited a new move up on increasing volume. This is what we call the wide range bar. We're going to come back to that in another pattern in a moment or so. This is another concept of ours, consolidation over time, as opposed to retracements to minor support, which is what this one was. Consolidations over time are burning off steam, if you will, from a prior advance, and that is a healthy consolidation in an uptrend. Notice I have my rising 20 period moving average, rising 50, rising 200. When you see this picture, your job should be buy every compelling breakout which this was one, as we're learning right now, and by every pullback to support when you have your reversal setup like this. So two beautiful setups here. You had confirming volume. Now, since we're talking about patterns and to sell these options on, this is what we're looking for. So these are the master trader money patterns. Now I'm going to show you how to sell options around them. We're looking for these 5 patterns that we're going over right now, plus any of these. And when we get our trigger, here's what we want to do. Under support, we want to sell a put option. What does that mean? It means, well, let's start with a put buyer. A put buyer is buying a put, expecting the stock to go down, and they want to speculate on lower prices. We are taking that money from the put buyer under support, and that gives our obligation for taking that money is we have an obligation to buy the stock at this agreed upon strike price, and we do it under support on or before expiration. And we use these charts to put the high odds on our side that we don't think it's going below this support. Then that's selling a naked put, and if you wanted to do a bull put credit spread, all you do is simply take some of the money you just put in your pocket from selling the short strike, and then you buy it further out of the money strike, and the difference is what's called the net credit. That's your maximum gain, and it's yours 100% to keep as long as the stock expires above this short strike price. But as I said earlier, once we enter a trade, we're simply in trade management mode. There's some other option firms out there who say, don't ever take a stop loss, just roll them into perpetuity. We 100% disagree with that approach. A stop loss to us is defined as the predetermined point in the line in the sand on the chart that we predetermine that the reason for entering the trade no longer exists. So if any one of these patterns, these 7 beautiful patterns, violates support, we're out. We're taking our stop loss. And depending, because of the time decay, see, that's why we love selling options, is because when buyers buy options, it's a time wasting asset. So day by day, we get paid as long as the stock is not going against us. So many times we stop out of positions and we still make money. And that's a beautiful thing when I like hearing it from my subscribers better, of course. They're like, Dan, oh my God, the stock went $3 against me and I still made money. That's right. That's why we love selling options. There's a lot of things we could talk about if we had time on this chart here, Garmin. And again, no oscillators. I'm just reading bars. I'm reading retracements. I'm reading tails. I'm reading no follow through to red bars. But wait, here's my higher range consolidation now. Absorbing this resistance to the left, right over the high of this bar. This was both a directional trade to us. So we would recommend bullish stock, buy the stock, or for our option traders, we have a whole toolkit of various bullish option directional strategies. But tonight we're talking about patterns and selling options. So we very simply, instead of buying the stock or a call option, we're selling an out of the money put here. And we're saying the odds of this support holding on this breakout is overwhelmingly high. And so it goes back to that risk SEC disclaimer page. Oh my God, I can risk all kinds of money selling a naked put. Well, that's a relative term. The odds of this pattern are overwhelming. My stop loss is under support, and I'm selling it out of the money, whatever, $64, $63 put, and I'm managing in between. Now let's do the same analysis on the bear side. And that the markets have been very unpredictable, I'll say, and volatile since the breakout in September failed. So look at this guy. I should have deleted the stock because it doesn't even matter. The master trader strategies apply to every time frame, any tradable instrument, the same. So we had an initial breakdown here, actually. Then we have a secondary breakdown, weak retracement. We have declining 20, declining 50. This thing can't bounce. Green bars ignored. Breakdown, breakdown, breakdown. Every one of these, we would be selling out of the money call options or a bear call credit spread. It's identical to the bull put credit spread, but we do it on bearish patterns. Number 3, this one's going to be easy. The bullish 1, 2, 3 continuation. We want a wide range bar. I'm not going to give you a definition for that. Use common sense. Look at the size of the other bars, and visually they jump out at you, right? This is one. This is one. Then we like these out of consolidations. Then the next bar is an inside bar, relatively equal highs, holds the upper 1/3 retracement, and that's our consolidation day, where on a smaller time frame, then you're having intraday support for 6.5 hours of the market day. And then you buy the high of those 2 bars. Your initial stop, we give it wide under this wide range bar, and you just position size it for that maximum loss. And then once it gets airborne, then you tighten it up to the inside bar. Here's another one, Boeing. Now, you know, this is well, it's actually a weekly chart. It's not daily. It doesn't matter. It is daily. It doesn't matter. And this just reminds me. I remember when it had earnings and it gapped up from 150 to 160. There were some services that were saying, "Oh, it's up $10. It's overbought," and they've been rolling their bear call credit spreads until it hit max loss. Well, guess what? It looked extended at 160, but look over here. It went to 360. It went up $200 more. So don't ever get sucked into the mindset of it's extended. Extended based on what? At Master Trader, we will teach you how to read extended, but how to then intelligently take a counter trend trade. This was just a beautiful 1, 2, 3 continuation, wide range bar from consolidation, rising 20, rising 50. Here was a breakout, slopped around sideways, another breakout, but this was a picture of beauty. Number 4, the Master Trader Professional Igniting Gap. What the heck does that mean? We're looking for a shock, if you will. We're wanting a consolidation, preferably a red bar here, because then the bears at least went home happy, and then something happened the next day. And I don't care the reason. It could be earnings. I don't care. The reason to me is 100% irrelevant. It gaps up, and then we drop down to an intraday time frame just to make sure that it's going to hold the strength for the first 5, 10, 30 minutes. And in our Master Trader Green Room, we focus on these gapping trades along with our opens and new trades and all that. Every single morning, we have a pre-market game plan. So this is what we're looking for, and a price void to the left, which means there's not a lot of resistance to the left. It's that simple. Here we go. This was a mess. I wouldn't be doing anything with this. But now we have a wide range bar off of support, major support, and it's just chopping around here above the rising 20. Still nothing to do. Now you have my attention. It gapped up. It's a pro-gap breakout of multi-week consolidation. That could have been a directional stock or option trade. And then the next day, I got my inside bar. Relatively equal highs, upper third, over the highs of those two. Again, we're talking about selling options today. This was a trade we gave to our subscribers in the weekly options trader. What that is exactly what we're covering tonight, actually, which is selling short-term options, calls and puts, and spreads around compelling patterns, but with 10 days to expiration or less. Now look what we're doing here, folks. We're just saying, where's the level that we think it's going to hold? And this was a little tighter for us, 97.5. But when we are willing to buy the stock as a directional, then we don't mind being tighter on our selling option strategies. We sold the 97.5 put. We took some of that money. We bought a $95 lower put, took in 57 cents a share, and 10 days to expiration. So as long as the next 10 days, which you can count the bars, it worked here beautifully, as long as it stays above this 97.5 short strike, if you sold a 10 lot of this, just to put it in perspective, that's $570 immediately hits your account. Now there's some, it just irks me when other option educators mislead the public for whatever reasons, and it ends up hurting innocent people. I heard some clown say, as soon as you sell an options, it is instant income. That is so far from the truth. You should run from anybody who says that. When I sell this put, I have a legal obligation to buy the stock at 97.5 on or before expiration in 10 days. But I've put 57 cents a share in my pocket. So if I am required to buy it at 97.50, I've already put 57 in my pocket, so my cost basis is $96.93. And that's how it improves our cost basis. And when I sold this put spread, let's say we did a 10 lot, 570 bucks comes in, the brokerage is only holding 1,930 bucks. That's 29% return on capital. And all we're doing is using a master trader strategy. We have a pro gap with a 1, 2, 3. And look at the opportunities. We do this every single day. These are so, directional trades for us are harder. They aren't, I mean, we find them, of course, because we're experts at technical analysis, but these income trades are easy because we can do them in any type of markets, sloppy, trending. We're getting paid, if you will, to call a short-term top or bottom. Pattern number 5. I won't talk about the M tops because it's just the reverse. It's the bullish W reversal pattern. They come in different flavors, and just like with any of our patterns, they all aren't created the same. You have to look at the pattern, the environment, multiple time frames, what's the market doing. Here's 3 of the flavors. So it comes down, it bounces, then it comes down again. NL means new low, and then immediately reverses with a big green bar. We call that a potent reversal and retest with a new low shock. This is a picture of beautifulness. This one, a deep move into resistance and a retest. So I got my bottoming tail here with another big green bar. What do I got here? This is a potent reversal, but we sometimes we take the first reversal, but it's always safer to wait for the retest. All three of these are beautiful pictures. They apply on any time frame whatsoever. And since we're talking selling options, and this was a real trade of ours, this was just very easy for me to show you. When fear rises, volatility rises, and that makes these option prices skyrocket. So whenever I see fear in the market, I'm thinking opportunity. I'm thinking I'm just waiting to get on board, but do it intelligently. I'm not catching a falling knife. Facebook here, look at the news. The FTC is probing them for their data breach, 50 million users. Implied volatility skyrocketed to 96. Can only go to 100. So it's at the high point of the year. I have my beautiful W bottom retest here, wide range engulfing, igniting. This is my entry. And we teach you in our option courses, obviously, which strike price to take, how long, how to manage it, what is an acceptable credit. We teach all that stuff. I only have 29 minutes with you, though. We decided to go way out of the money, which we can do with high volatility. The stock was trading, let's just call it 164 right here. We went down $9 more, and we said, hey, I'll sell you a 155 put. We bought a further out of the money put to make it less margin and less risk. 560 bucks on a 10 lot. All we're doing is calling a bottom for 3 days, ladies and gentlemen. 7.5% return on our capital of what the broker held to put on a 10 lot on this. And the stock could go 6% against me, and I still make 560 bucks. Now, I tell you, if I were to advertise our courses, like, hey, come, I'm going to teach you how the stock can go 6% against you and you still make maximum profit, I would run, because I would sound like a snake oil salesman to myself. But it's true if done properly. If you don't do it properly, yes, you can get hurt. But with our setups and our trade management, it's like taking candy from a baby. Here's just one more example that we'd be selling out of the money puts here. See how they come in different flavors? So this was a retest. It pulled in, gap fill support, red bar, looked lower, then green bar, inside bar, gapped up. I sell an out of the money put here, folks, the $41 puts. It's a no-brainer setup to me. Stop under the low. Here's another one. Came in hard, bounced hard, looked lower again with this red bar, and then wide range igniting. Red bar ignored, selling out of the money put spread, go into management mode. It's that simple. This is a must-have course if you want to learn how to sell these options and credit spreads, exactly what we've been reviewing tonight. This silver one is a great 5-module course giving you an intro. I had to run through definitions of the foundation, a master trader approach, modules on selling bull put credit spreads, bears, management. This gold one, though, it's 12 extensive modules. Took me over a year to put together. I have hundreds of amazing testimonies of how it's really changed people's lives because it's done properly. Many of our students have already been through the junk and gotten run over. And then based on requests from our subscribers, this platinum is our gold plus 3 months of the green room that I mentioned, which is our live trading room. and 3 months of the weekly options trader, which you will see trades coming out that are the product of this course and what you've been learning tonight. So do yourself a favor, go to mastertrader.com/spread trader. Check us out on YouTube. We have a Facebook page. Sign up for the chart of the week at Master Trader. Happy holidays, everybody. Good trading, and feel free to email me, Dan@mastertrader.com.